Hello and welcome to another series of Factor Investing. Today we are going to discuss about value as a factor. So we have a very special guest from ICICI Prudential Mutual Funds, Mr. Amit Vashisht, lead passive investing business. So ICICI as a mutual fund is very gung-ho about the value as a theme. So my first question would be how you will define value as a factor and what dimensions did this factor actually defined by?
Thank you, Ritu. Definitely, value is very close to us as an AMC. One of our biggest fund in active side also value discovery fund, and we feel that value as an asset class is very close to Indian as investors also. So whenever value do, we do very well. So how this value factor works? Basically, the word says find the undervaluation of a stock compared to its intrinsic value. If it is undervalued, we prefer to take that as a stock in the portfolio. That's name suggests. Although now how we filter it out, so we have multiple parameters to filter it out. Start with price to equity, price to book value, ROC is again return on capital employed, dividend yield, price to sales. So these are some of the parameters which we use to find out whether the stock is undervalued or overvalued. These are the basic words which you have generally seen whenever you see any product, whether it's active product. Within passive also we talk about market cap. Every day we see what is the P level. So these levels we generally try to track how the market is shaping up, how the sentiments are, whether it's overvalued or undervalued. Same we track in this particular index.
Okay, so when we talk about value as a style, the word comes which is a value trap. And that is the biggest risk probably we say in our value investing, which is associated with this factor. So how, as a fund manager or, being a professional, you figure it out this, how not to be in a trap of that value.
Sure. So we generally use qualitative analysis and quantitative analysis. Qualitative analysis, we see how that particular business works, what is the current trend. Every business have a different parameters to track. So active fund manager see FMCG, PEPV might be different from the FANG. So that's one way you filter it out to understand that whether this sector is undervalued compared to its average P and PB. Same way on the quantitative, we use all these parameters which we highlighted. Clubbing these two will help us to come out of the value trap.
Okay, so a value as a factor we have seen last 3 years. Around I think after 2020, we have seen that value as a style actually performed pretty well against the quality, we can say. And do you see, I think this is the longest rally which we have seen in a value in Indian markets. Any kind of a study or findings in terms of performance related to Indian market, which you can share with us?
Value tends to do well after every market correction. Whenever you see a market correction, the value will start outperforming. We have seen what happened in 2020. There was a complete value correction, and whenever the market corrects, value does well. Same was happening in 2008, 2011. So that's one of the reasons that you have seen value is doing well in last 3.5 years.
Okay, so do you believe this rally would continue, or what all the factors do you see in case of outperformance or underperformance?
So as we highlighted, there are multiple parameters which value tracks, which includes PE, PB and all these parameters. Other than that, we do rebalancing also. So all your indices, whether it's value, whether it's low vol, whether it's any passive funds, they have to rebalance. So they generally rebalance quarterly, half-yearly, annually. So whenever this rebalancing, they see what happened in last 6 months and they keep on rebalancing. If a particular stock becomes unvalued, the stocks move out. Generally, what I highlighted, whenever market corrected, value have done well. Quality, we feel that there are a lot of quality value stocks also. And these level quality value stocks is what we think make more sense.
Any behavioral approach do you see in our value as a theme? Because in Indian market, especially if we talk about, then probably we think about the good businesses are quality businesses only, and value generally is not seen as we see the quality as a factor.
So behavioral price on the value is basically again what we see whenever there's a market correction. Value is the best option to go into it. Other than that, what we see, sometimes good companies do find at a better price. For example, Infosys or Nestle, You might remember there was a news on the Maggie when they were saying that go against on the Maggie. Nestle corrected big time. The business model was very good. So it becomes a value buy. So that's something which we think makes sense for a value buyer to see these opportunities.
Value and quality, or probably a growth, we can say, are two very different approaches. Do you think like we can go ahead with both the approaches combining in a single product or single, like multi-factor approach kind of a way we can go ahead, or we should go for value or growth of quality?
So sometimes you might see value and growth both are doing well, like in recent time, momentum and value both does well. But what we feel, yes, sometimes when you see a one side growth rally, value miss out that particular rally. So both can go in a partnership as well. If someone wants to create a portfolio, he can create a portfolio with including both growth and value style.
So global studies, if we see that there are a lot many multi-factor approaches or multi-factors products are there, where we see like value as a primary factor. I mean, they take up value and then they add, probably the low vol or the quality kind of factors in that particular approach. Do you think that would be a right approach for Indian investors as well?
Yes, definitely, because Indian investor needs to participate in the rally also, and they should understand whenever there is a correction, they need a stability also. So value will help them out to participate whenever the market rallies after correction. And the portfolio like quality and low will provide them the stability which is required in your portfolio. So they can definitely go hand in hand.
Okay, so momentum, what's your thought on momentum plus value?
It's like that you're saying, I want to drive Lamborghini and Ferrari together. So it's an art. If someone can, he can try. But what we feel, going with value, you can use quality and low as a strategy to give you a more stable portfolio.
Okay. So Amit, let's change the gear and we'll go for a rapid fire round. And one key driver behind the value factor?
Market correction.
If we'll talk about two risks associated with value factor?
One is value trap. And second thing is continuous rally in the growth stocks. Value tend to underperform.
Okay. And what are the two benefits which we can get it?
Value buying and market correction. This will outbeat many other options which are available in the market, and they can rally for continuous years also.
Okay. So value as in factor, what do you suggest? Should investors solely or with the multi-factor approach?
Investors can use both the strategy. I personally prefer value to you can go solely also.
Okay, so a current market scenario, how would you feel like, whether it's a app for value or value will continue to perform, or we can see some kind of a pause in value investing?
At these levels, we would recommend to look more on a qualitative value style. If you want to take a value, take a mixed approach. What you highlight as a multi-factor, taking low vol and quality as a model, adding in value, will give you better experience in next 3 to 5 years.
Okay. Thank you, Amit. Thank you for giving us insights on value as in factor. Thank you so much.
Thank you for inviting me. Thank you.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.